Hey, we really got to get you better mics or something.
I've played that better before. That wasn't impressive, I think. All right.
Guys, it is 5 o'clock. It's Monday, and we are here for another episode of After Hours Real Estate. Chris Pesek, I'm a real estate broker in Austin, Texas. This guy is my buddy Stephen Babcock. He is a mortgage loan originator for the great state of Texas. He also lives in the Austin area. And we've got orange checkerboards. This is a really, really good friend of mine, Haley Jones. Haley is a realtor in Knoxville, Tennessee, which, I mean, we all know Knoxville or Tennessee is where everybody's going now. Nobody's coming to Texas anymore. Everybody's going to Tennessee.
Obviously, they're coming here. We have so much orange. People love it.
And you even have tea earrings.
I know I did. I was like, is this over the top? No.
No.
Maybe a bald hat on. By the end of this, I might have a hat on. Okay.
You really I would actually love to see Shay behind you in because I know he's got overalls, right? I know Shay's got overalls.
Actually, he doesn't have overalls.
Oh, well, Christmas present.
That's a good idea.
Oh, shit. So, Haley, tell us a little bit about you. Tell us a little bit about what's going on in Tennessee, Knoxville area, Sevierville, all that good stuff where you are.
Yes. So I am in Knoxville, Tennessee. I'm from Knoxville, Tennessee.
Hang on, time out. Sorry. I screwed it up. The whole thing about the people now is messing with me. It's after hours, so we typically drink, but Steve is the only one that's drinking right now. So, Steve, tell us what you're drinking.
High Life.
Oh, my man, the High Life. I mean, look, the champagne of beers. Let's go.
You remember that 5-second commercial for the Super Bowl? It was their big, like 300-pound spokesman, and he was just standing there and he goes, High Life, and then just next commercial. I mean, that was it.
It was
awesome.
Effective. It was obviously effective because you're
that was like 10 years ago, and I still remember it. Just, High Life. That was it. That's all they bought. Was however long it takes to say that was the commercial.
Oh,
your boy's drinking water again. I'm a disappointment, I know. Haley, what are you drinking?
Well, it's finished now, but I had some water. But I actually do have for those of you who like to ski in the Tennessee area, Catalucci. This little shout out to them. I got some coffee in here. So
nice.
Yeah.
Whiskey is good. But you're not drinking because you're doing a friggin' Ironman Sunday.
Yeah, I am.
What the hell?
And I feel nervous in my heart.
Well, as long as you don't drown, I mean, it's kind of hard to die any other way.
I'm not worried about drowning. I'm worried about the bike part because the bike is so unstable. And then apparently people like pee on the bike. Like you're not supposed to stop. That's new to me. Yeah, exactly. That's new to me. So a little bit nervous about that part.
I pee in the water. I think I'll pee in the water first.
Yeah, but I'm gonna be on the bike for like 7 hours, man. Like,
oh shit, you're doing a real Ironman.
Yes.
Oh my God.
Yeah.
I thought you were doing like a baby, like a triathlon. No,
I'm doing the Ironman.
Is anybody else thinking of Dumb and Dumber when he's like, just go, man? No? When you're talking about peeing on the bike, and they get stuck together.
Or a pullover, so.
Yikes. Wow.
Awful.
Okay.
Good luck.
So now, Haley, go ahead and tell us a little bit about Knoxville and you and all the good stuff.
Obviously, don't know if you've heard the news, but Knoxville is a booming relocation market. If you look at 2023, 25% of people that did transactions in the Knoxville market were not from Knoxville. So that's a pretty big, substantial amount of our business here in the area. Wow. And then what's interesting, because we have multiple markets. We've got the Knoxville market where people are relocating, and then we've got the Sevierville Gatlinburg market, which is part of the Smoky Mountains. And so that is all, investors. But if we look at inventory in Knoxville, we're at about 2 months. So it's a very strong seller's market.
Holy crap.
Inventory, yeah, I know. If we look at inventory in Sevier County, so that like touristy market, inventory is 11 months. So we're at this like very wonky.
Wow.
Weird.
Yeah, it's a very interesting time these days. So yeah.
Projectile, yeah. It's we're seeing some I'm laughing with Chris. there was a way I described it, which you just had a much nicer way of describing it, but I described it on the show as what did I say? Intermittent projectile vomiting,
Yes.
depending on where you go. Like that's how you have to deal with the market. I mean, we have some areas where we get multiple offers and, over asking, and then other areas which just can't sell. They can't give it away. It's just crazy to me.
Yeah, same. And we're obviously people relocating. A lot of people are super interested in schools. And so areas that have a connotation of a better school tend to be like very hot topics. But we also have a lot of people that want land. But I think the perception is the land is cheap, and it is not cheap. So,
I'm taking it. It's not. Well,
it's not cheap at all. Yeah, no, and essentially anything under 200 is like not a livable property, from a house perspective. Wow. And then even under a $300,000 mark it's hard to find something that you wouldn't just want to be like. So yeah.
So if you're over 300 though, are you at least getting a pretty good size of piece of land? Like.
I mean, if you're further out, 300 is, you might be able to find a 1/4 acre at 300, but you're not going to be like near the Costco and like.
Oh shit!
Yeah, so
I'm thinking like 4 or 5 acres.
Oh hell no, no.
Wow. Okay.
Move to Texas, everybody.
Yeah, move to Texas. Stop going to Tennessee.
Yeah, if you're further out, you could, but that's hard. That's what I'm saying. The perception is it's cheap. And it's not. And then obviously, you can find 5 acres for cheap, but it's on the side of a cliff. Like,
right.
We have mountains here, which surprises people. Every time, like, people are like, "You have mountains?" I'm like, "Yeah."
It's beautiful, actually. Really, really beautiful. The drive there from Nashville is pretty awesome.
Yeah, it's pretty. It's really pretty.
All right. Well, cool. So obviously, if you're looking to relocate to Tennessee, you're calling Haley. That goes without saying, because she's kind of a badass.
Even if you're not a Vols fan, it's okay.
Even if you're not a Vols fan. Even if you're not a Vols fan. So let's jump into this today. The whole title of this video is like, what the hell? The Fed dropped the Fed rate last week 50 basis points, and mortgage rates went up. What the hell?
Yeah.
So, Steve, should I just start reading, or do you want to give us any insight? Because you always talk about this.
I do. We could sum the whole thing up just by saying that the market is forward looking. I mean, if you're an investment dude, you're working at a firm, let's say like I love that. Let's see.
Listen, Michael, I don't know who you are, but I have ways to find you.
Wait, Haley, you're going to love this next one, by the way.
Yeah. What's up, Erica?
So say I am a financial person at Blizzard Entertainment, right? They had World of Warcraft, right? That was making like $12 million a month in just pure profit, right? And they have a war chest of money. And when you have that much money, you may not lose it. You're not allowed. You are allowed to grow the money, but we don't expect you to grow it like crazy. We want you to protect the money, okay? And that financial person in charge, I mean, you can grow it, but you can't lose it, right? And so that financial person in charge has to find out ways of dealing with the money. This is one of many, many players, by the way. I'm just trying to give you a quick example. So now I've got, let's say, like $800 million. I don't know what it is, but I know it's close to $1 billion, if not exceeding it. I need to protect it somewhere. But what you do is you invest, instead of with institutions, you invest with governments. Right. Yep. So we're going to buy government debt. And the only way we're going to lose this money is if the government goes down. So which one are you going to invest in? The one with the strongest military, the United States. Right. So that's why when people talk about buying securities, that's what a security is. You are buying a piece of the U.S. We're going to pay you back states. OK, I'm trying to dumb this down and just make it kind of simple. Right. But long story short, is that when that guy with that huge war chest, or girl, whatever, but with a huge person with the huge war chest of money, right, is going to use that, to invest it someplace. The person they're calling isn't Schwab, the person they're calling is like the Federal Reserve. And they're like, yeah, well, we heard that speech you did today where you said that you were probably going to raise rates at the next meeting in a month. I want that right now. I'm not waiting. right? And and this is not exactly how it happens, but I'm trying to give like the simplified version. And so they look forward. I'm not going to wait for the market to adjust. I'm going to freaking do it, right? So right. And if you want part of my $1 billion, you're going to play ball with me. And that's just kind of how it works. So by the time rates actually did adjust, the only thing that really happened was the world got to see what the adjustment was, but we already knew it was going to happen. So the market's kind of pre-adjusted for the adjustment. Does that make sense?
Yep.
And then when it came out a little higher than expected, the rates went down. I'm sorry, the rates went up. And mainly, now it's all speculation, but I think it's because the such a huge cut out of nowhere when you've told everyone everything's fine, the market's great, jobs are strong, and the economy is doing well. And then we're gonna, oh shit, a panic cut, right? It really, sorry, I probably shouldn't swear, but it's basically what it looks like is either oh shit, the world's falling apart, or we're going to politically try and make sure that whoever's in charge right now doesn't look bad. But either way, and I really don't want to get into apologies, but either way, the Fed it's rare for them to make such a move right before an election. They are supposed to look apolitical, and what they do signals more than what they're doing. I mean, they're really like a loudspeaker for I don't know, like a crystal ball, so to speak.
Right.
Anyways, people spend their entire careers just studying the Fed.
And good luck. So, all right, let's jump into this. So the basic premise of this, yes, mortgage rates really did move higher after the Fed rate cut. This is Mortgage News Daily. They publish daily coverage of mortgage interest rate movement and have done so for 20 years now. So it's a great place to quickly check in on trends and get a sense of what's true and what matters. If you'd be checking in at any point in the last few weeks, you saw one of several attempts to remind readers that today's Fed rate cut, which was last Thursday, right? Not only had absolutely no implication for lower mortgage rates, but indeed that mortgage rates often move higher on the same day as Fed cuts. This is what happened today. Interestingly enough, mortgage rates were already slightly higher than yesterday before the Fed announcement came out. The bonds that dictate mortgage rates are actually pointing to even higher rates tomorrow, unless there's decent improvement overnight. So let's just go from the basic here. And Haley, I know you're in a lot of the same channels I am. One of the things that cracks me up is the Fed announced that they cut rates, and I saw no less than 20 realtors on their Facebook and Instagram and all this other shit going, the Fed cut rates, the Fed cut rates. Yeah. And they don't know what's happening. Right. So I'm not alone in that, am I, Haley?
No, not at all. Well, and it's confusing. And I also think maybe this is dumb, but until I was in real estate, I didn't even know there was a basis point. I didn't know any of that stuff. So I think that's part of it too. Is I also think it's it's clickbait essentially.
It's so bad.
Yeah. And so the thing is I also think that everyone's we can time the market based on what's happening with rates. And I just do not believe that at all. I think that anytime you're trying to time the market to make a decision is not great. You got to make the decision based on what your need is and what your family needs, not what's happening with the rates, because you have no way of controlling that. So anyways, I just think it's interesting because I'm not a huge scared tactic person, nor am I woo, this is the perfect time, because I don't know. I think we're so misinformed. So
that's a good point.
Yeah.
But there's if you go to not Hollywood, if you go to Vegas and we want to I'm really butchering this. You go to Vegas and you want to gamble on something. There's a statistics out there there's a such and such chance that this person should win, 40-1 odds, that kind of stuff. They have the exact same thing in the investment fields, but it's there's a 50% chance that Fed Chair Powell is going to raise rates by 50 basis points. And it was up to almost 100% chance 2 weeks ago that he would do 25 basis points. And then it went to 67% chance that he's going to do a 50 basis point move. And it's people really spend their entire lives analyzing this man's words and what they think the market will do, because honestly, it could mean the difference, between making or losing millions for companies. It's unreal. Yeah. We're talking nerd maximum. truly like you can't get more. Anyway, sorry, keep going. We're good.
Well, but again, that's not on the mortgage side. That's on the bond side, right?
It's just finance. It's just finance.
Yeah.
Yeah. If you're an investment person, you pay attention to the Fed all the time. You know, you care. And the Fed sets the rates for what banks can get money at. So if I'm a bank and I need cash, I can borrow it from the government at whatever the Fed rate is. That does not mean that the Fed sets mortgage rates.
Yeah.
They just set the rates for the banks that give me the mortgage. Now, are they going to give me a mortgage at that rate? No, they're going to make money on me. So they're going to charge me a higher rate than what the Fed is charging them. Right. Usually it's 1.5 or 2% higher.
And
now I'm rambling. Go ahead.
Can get away with.
Well, yeah, truly. Yeah, I suppose that's true. That's true.
All right. So, and this is one of the why I like Mortgage News Daily. Given short attention spans, here's a bullet point list why this paradox exists. The Fed meets 8 times a year and mortgage rates move daily. I thought the Fed met 4 times a year. I didn't realize it was 8.
I believe it's 8.
No, that's what it says. I'm not calling them liars. I didn't realize.
We know it's at least 4. Okay.
Yeah.
We can do that.
Bonds that influence mortgages can actually move every second. I guess that's based on who's buying and who's selling, right? It's just like a standard.
And China could decide to buy at 12 o'clock China time, in the afternoon.
That's good. All right. Mortgage rates that had a long head start toward lower rates while the Fed waited for their meeting date. So, yep, mortgage rates are, again, they're moving in between the eight meeting dates. A trader would be stupid to keep a tradable rate bond in higher territory if they knew as well as you did that the Fed was cutting rates today. I mean, that makes sense. Mm-hmm. So why would they wait to trade mortgage rates lower? Nothing was stopping them, and that's why rates dropped so much in recent months. Again, we talk about it all the time. It's built in ahead of time.
Yeah.
I've had at least 4 or 5 people ask me why the rates went up. What's going on? It's very misunderstood.
Yeah. Well, and to Haley's point, and I guess we don't think about it because we're in the industry and we pay attention to it, but most people don't. Like, again, it's the clickbait headlines. It's, oh, how much am I paying attention? Oh my God, rates dropped. It's a great time to buy a house.
But it's even worse than that because the rates there is no rate. Right. And it drives me absolutely crazy. Yeah. So like when I log in right now to my phone, it's and I'm looking at, what the updates are through the text updates and all that. It tells me that the 6% bond is trading at such and such basis points. All right. The basis points dictates the price. Okay. And then when I hear that the Fed has lowered rates by 50, basis points. Okay. Well, hold on now. What did it do to the 6% bond? Did it make it so good that now we don't trade that anymore, that now we're trading the 5% bond? And then what is the price for the 5% bond? Did that move a full 50 basis points or did it move maybe 40 or 30 basis points? Because when you lower the rate from the Fed, again, it's only what the banks can borrow. It's not what mortgages are. And mortgages have lots and lots and lots and lots and lots of different bonds that trade at different prices all throughout the day. So it's never as simple as people think it is. And then when I pull rates for someone, I might get 80 options for interest rates. Each one will have a price next to it, all the way up until I can actually pay you for taking a bad rate. I can give you a really great rate, but you're gonna have to pay through the teeth, right? And then everything in between. And then that's just one of like 12 different programs, and each one has probably 20 options, right? For rates. So I mean, there is no rate ever.
And then you can even buy different rates or get paid for rates.
It's ridiculous. The whole thing's ridiculous. But I'm here to help if you need help navigating that river.
Meanwhile, call me.
That's right.
Oh crap. So other angles of bullet points on the same topic. The actual Fed rate cut itself is only one part of the Fed day and usually not the most important part. So you're shaking your head. I have no idea what they're talking about. What's the most important part?
Their future outlook. So CPI numbers are huge. GPI numbers are huge. That's the producer price index that shows what companies are paying for things, and the jobs numbers are just gigantic. However, the jobs numbers every month they've almost been double what they should have been, and then they get reverted when the new numbers come out. So it's like, oh, we're looking at the new numbers. I don't worry about the old ones, but but we do, because all of a sudden it's half of what we were reported last month, like 18 months in a row now, something like that.
Yeah,
It's weird. The numbers are weird right now.
And so it just actually
That's
occurred
nice.
to me, because all that other stuff is coming out, that's actually they're starting to price in rates for before the next Fed meeting, basically.
I'll tell you, I think that the rates would have been a lot lower right now if the government hadn't been messing with the jobs numbers. I think anytime it's perceived that a government is influencing financial numbers, basically it spreads uncertainty, and uncertainty it causes paralysis in the market. Right? If we don't know what's happening and what the real situation is, we're just going to take a step back. Right? Gotcha. And so, I think that things could have moved a little smoother if we had been in line with the private payroll numbers, which it looks like all of the revisions were, but they're all like a month late, and it just, the optics at best, the optics look terrible.
Yeah, that makes sense.
Gotcha. All right, so
we literally had a revision, about 3 weeks ago, of 800,000 jobs.
Yeah, it was like half of what was reported.
800,000. They just said, "Oops! Oh, by the way, we were off by 800,000 jobs. Sorry." God. And they did it on a Friday.
Wait,
when no one's paying attention.
What's like the total number of jobs? Like, you know what I'm saying? Like 800,000 is what? Like, what do you think? You know what I'm saying? Like,
so each month of, actually, last I checked, I think with the amount of the population, we need to have something like 250,000 jobs or more to be decreasing the employment rate, right? We want that down, right? A low unemployment rate's great, right? Anything, and I don't know if it's exactly 250, but it's around there. And then anything less than that starts, detracting from that number. Yeah. And they're reporting numbers like 160,000 jobs a month, and in the next month saying, "Oops, sorry, it was only 80,000 jobs." Right, which is terrible by itself. But then when you get to the end of the year and you say, "Hey, we looked at all of our numbers last year, and in addition to all those other ones, we found about 800,000 that we didn't count." I mean, it's like, holy crap. So we looks like you're looking at something. I was
there's a guy walking down my street with a gun. I'm like, what's happening here?
I mean, you are in Tennessee. That's
I'm like, you're going to be like, Shay.
Yeah, yeah. Anyways, numbers are bad. We can just talk about that. Okay. Numbers are bad.
Anyways, just
all right.
Tennessee. Don't worry. Don't mind me.
The Fed, like I said, come move to Texas.
Yeah. The only difference is you're carrying one too.
That's right. Yeah. Oh, the Fed also releases a rate outlook from each member every other meeting. Today's meeting was one of those. Okay, so we had outlooks, so looking forward from them. And then the Fed also conducts post-announcement press conferences in which the Fed chair can refine the market's takeaway and help shape expectations for the future. And all of that happened last Thursday, right?
Well, yeah, I'm more interested in Wednesday this week. So we already know that there's going to be something like 5 more, or let's just say multiple rate cuts on the table, because the Fed has told us that. But then nothing happened in the market. So why would nothing happen in the market? Well, because we don't know what kind of rate cuts they're going to be or when they're going to happen. And I'm not going to trade on a 10-year future outlook. We're going to trade on like an immediate outlook, right? And once we find out what the jobs numbers look like, we'll know, how aggressive the Fed might be. But again, all these variables, you plug them into a formula and see, the best formula wins, to predict what the Fed is doing. But typically, if there is going to be an adjustment, it'll be right around when the CPI, PPI, or the jobs numbers come out. Like that afternoon, like when he's talking about it.
Right. Yeah. Okay. So basically, in not so many words, they're saying Fed Chair Powell's press conference was less rate friendly than you would have expected, given the 50 or 0.5% cut for the fund rate. But here's the kicker: nothing about last Thursday's announcement means much of anything for the trajectory of rates moving forward. There's probably a slightly bigger risk that recent rate lows represent something of a floor until, this is what you just said, economic data makes the case that rates should go lower. But there's never any way to exactly know what rates are going to do in the future. If you don't believe that after last Thursday, there you go. Believe it.
So I think we have so much uncertainty and so much perceived corruption within the jobs numbers. And by corruption, I don't mean that like a, Banana Republic kind of thing, but it does seem like at least someone over there is trying not to alarm people, to make it look like things aren't as bad as they are. But we have private payroll numbers that have been not getting adjusted. They're just fine. And their numbers have been just fine every month, and they're always just fine, right? And government numbers were always just fine too, until recently. And by recently, I mean like a year and a half ago. But when they started deviating, and by a lot, like 200,000 jobs, then the private payroll, which is supposed to be like a checks and balance, and they're just not even close now. And so a lot of what I fear is that whoever is doing this number reporting is just waiting for November, and whoever becomes president is going to, I believe, have a storm to deal with.
I've kind of following the same line there.
And then when you lower rates, you hurt inflation. So now we're going to raise inflation. And I guess when you own a house, that asset goes up with inflation, right? If the rebuild cost on a home now is double the cost because inflation has gone up, well, then your home it should be theoretically double the cost, right? And so, as long as you own that asset, you should correlate with the inflation. But I would expect if the Fed keeps this kind of aggressive cutting, like 0.5% at a time, and they're supposed to do another 5 cuts, right? And then that's what, 2.5% more, 3% total if they stay in line. That would bring us down to what, 2%? Yeah. An interest rate of 2%. So we'd be trading again at like 3.5%, 4%. I would expect prices on homes to go skyrocket.
Yeah. And then I sent you this chart because this is kind of a prediction based on Mortgage Bankers Association, Fannie Mae, Wells Fargo, and Moody's, kind of what they're expecting through the end of 2025.
I saw that. And what were they expecting, Chris? What were they expecting? And before you say it, what were we expecting? What did we predict at the beginning of the year in January?
Well, we predicted 5.5%.
Right. We're never usually that right. So I'm just kind of milking it while I still can.
Well, no, but here's the problem. Here's the problem, though. That's why we're not right, because they're saying by the end of 2025.
Oh, well, screw them. I still think we're going to get there.
Yeah, I was like, damn it, we were off.
No, we weren't. Not yet.
Not yet. We still have time. So, yeah, basically 6.2 was average September 12th.
Look how fast it went from 7 to 6.
Oh, my God. It dropped. Yeah. It dropped so fast.
We still have a chance to be right. I think we're going to be really close.
I
really do.
I hope so. Well, I don't know that I hope so, man. I don't know. I mean, for my job, yeah, that would be great. Haley, 5.5% interest rates at the end of the year, that would help, right?
I mean, well, yeah, it would help. But at the same time, I think the perception with all this, like, not related to this, but related with all this like commission stuff is like prices are going down, which I absolutely don't think that. And I also think people think prices are going down in general because like a bubble's going to burst. Well, like where we've always had low inventory. So like a lower rate is going to push us back into like a 2021 where it was like, here's my child. I would like your house. I mean, so for business, I guess it's good. I mean, obviously, but at the same time, it's like, prices aren't coming down on either side of those aspects. So
it'll be crazy again. And Chris and I always joke that about the saying that the best time to buy was always 2 years ago. I mean, if you were to buy right now, you're going to be pissed because you got a bad rate. Well, guess what it's going to look like in 2 years if what we predicted is correct, right? You're going to need another, $100,000 just to get an offer in. And then if they do accept it, we're going to have to waive the appraisal and the inspection and oh my God. And then have you ever just looked at the average amount of time someone stays in a home? And then you look at what people were offering over a few years ago. I don't know what it was down there in Tennessee, but up there, but down here in Austin, I mean, there were some that were 100,000 over asking. And, hey, if you're there for 7 years and you divide the $100,000 over how many months you're there, you're still not actually paying a higher mortgage rate today, are you, at that higher interest rate? Do you know what I mean? That $100,000 really adds a lot, It's like looking at a $100 a month car payment for your lease, but you only have to put $20,000 down. It's like, oh, wait a minute. Hold on a second. It doesn't make sense.
Oh yes. I don't know. I just think this all goes back to like, Yes, use this to inform your decisions, but at the same time, you cannot like live your life based on this macro level stuff. Like it just doesn't make sense because it's never going to work out perfectly, period.
Yeah. Well, and that's a good point, because you're gonna, like, if you want to buy a house, okay, well, you're gonna get qualified. And if you can afford $500,000, we'll go shopping for $500,000. And if you don't like what it can buy you, well, then maybe don't buy.
Right.
It's not going to get any better in the future, I don't think. But I mean, that's the decision you have to make. And that's what you're saying. Regardless if the rate is 5.5 or 8.5, if your budget and everything allows and you're qualified for X amount of money, we'll go shopping and see if you're happy with that product.
Right. Right.
I mean, that's just kind of the way it is. I mean, people are getting job transfers and stuff all the time, and that's basically what they have to do.
Right.
Oh, I can afford this much. I'm having to move to Knoxville. Well, I'm going to go find a house for that much.
Right. Yeah. Totally. Well, and I think too, it's just like I have a lot of clients that get feedback from family members that either have a lower interest rate or like they bought their house 40 years ago. Okay, and I'm not trying to be rude. I'm just saying, like, that's irrelevant information. Like, you have to make a decision based on what is comfortable for you, period. Like, is that mortgage payment feasible? Yes or no? It doesn't matter, so anyways.
I had one of those guys once. I mean, you get them all the time, right? But I'll never forget it because rates were going up. And I told him, hey, this is your rate. It's FHA. He says, well, I got a friend in California, and he's telling me that your rate's dog shit. God, I gotta stop swearing. I'm sorry, but your rate's terrible, and it should be at least half a point lower than that. And so I think I'm going to shop around. I'm like, okay, well, you got 32 days on this contract. You need to tell me in the next 5 days what you're going to do. Otherwise, I'm not sure I can be your lender. I waited until 15 days. And finally, I was like, listen, brother, I'm sorry. You're going to have to work with somebody else. I close on time, and I'm not about to tell everybody that I'm not going to close on time. So you can find somebody else to work with. I'm terribly sorry. See you later. And he's one of the only people I've ever really fired. Turns out he closed 3 months later with a 1.5% higher rate than the one that I was offering him. Right. I mean, it's honestly, I don't expect everybody just to trust me. Right. I mean, you just met me, who am I? Right. But man, if you don't trust your lender, don't start to buy a house.
Yeah.
Find the lender, trust them first, and then go buy a house. Right. And do not shop once you're under contract. That is the worst idea. The clock is ticking. Shop before you're under contract. You can give them all a fake contract and say, all right, I'm under contract. What's your rate right now? And guess what? They're going to have the same difference in the future too. Because all the lenders, the only difference they have, because they all pull from the same market, the bond market, right? The only difference is what they charge you, and they're going to charge you the same. So shop before you find a house. I mean, am I wrong, Haley? I'm not trying to say don't shop, right? Like, I don't know. Tell me I'm wrong.
I agree with you, but I love your passion.
I don't like seeing people shoot themselves in the foot, that hurt. Well, then drop the gun.
I think that it's also hard because there are a lot of predators in this process, and people get told things at the very front that sound really great. And also you don't know what you don't know. So someone promising something that someone doesn't know to be like, well, do you close on time? No one knows to ask that. You know what I'm saying? But it's there's a reason why agents have certain lenders that they recommend because they trust them done. You know what I'm saying? So yeah, I'm with you 100%.
Oh yeah. And by the way, if you don't trust your lender, I guess what I'm trying to say is don't ask for their prequal. Yeah. Don't go shopping with their letter.
Yeah. Well, and that's the key. There's not a lot of people that randomly run into lenders at the grocery store, right? That you develop a friendship with. So
dude, I had a woman call me last year, and I don't even remember telling her husband, any of this. It was. I got a special needs kid, Haley, and I don't get much sleep, so my memory's terrible, right? So I have to be really truthful all the time. That's my joke. I'm kidding. But I got this phone call from him. He wanted to do a refinance, and here's your rate, and then he disappeared, and I was kind of busy, so I just kind of forgot about it, right? I followed up, but he didn't answer, and followed. Okay, well, he's gone. I could have done better. Okay, I'm first to admit I could have done better. However, 3 months later down the road, the wife calls me and says, all right, let's start up again. And I'm like, what are you talking about? Her name isn't ringing his name, right? So I'm like, what's happening here? She explains to me that they still haven't closed. The rate has continued to rise. And she's like, whatever the rate is, lock us in. I trust you. Just get it done. You don't have to call me about anything. Just tell me when the close date is. I was like, oh my God. All I kept thinking was, can you imagine the conversation they had before she made that phone call?
Right. Yeah.
Yeah. Oh my God. Well, and I also just want to say that, like, to people, that it's not about, yes, we are doing this. This is our business. This is how we make a living. But we're not in this to be like predatory. And if someone feels predatory, you need to like run away. The reason why you need to be pre-approved before you start shopping is so that you know what you can get. Not like, it has nothing to do with what your price point is or any of that stuff. It has to do with like us wanting you to be in the best position for you to get what you want. Because if you're retroactively doing it, like, you're screwed, for lack of a better, especially, specifically in the Knoxville market. Like, no one is entertaining your offer unless you have a legitimate pre-approval. It's not going to happen, like, period. Right.
I love the investors that call you on a Saturday that need a pre-approval in 1 hour and they're self-employed with 20 properties. It's like, sorry, no. What do you mean no? I'll call someone who wants the business. Oh, I want the business. I do. I really do. I'd love to help you, but I'm not gonna do that to you.
It's just like, you're just being honest. Like, these are the options. So yeah.
I'm giving you the short version because I know we can't work together. But yeah, no, you're you're absolutely correct. Oh my God. I don't know, man. Also, personality types. It's funny that I've mentioned this, right? But like you I've found that people either really like me or they are like, man, I really hate Steve, right? Like, it's just one of the two, right? It's my personality will rub people one way or the other, period, right? It's usually not in between. And, let's find this out before we're 2 weeks in,
right. Right. Totally. Yeah.
No doubt. And if
maybe I should stop drinking.
Talk to your realtor. Like Haley said, we know, and it's different, right? I don't send every one of my buyers to Steve because he doesn't.
Wait, what? I'm kidding.
He doesn't do everything.
Steve,
yeah, right.
I'm not serious.
No, I know. But there's different lenders for different things.
Agree.
Like, even though he can't,
sure,
he can do commercial now. I know that.
Yes, I can, and in all 50 states.
Oh, there you go, Haley.
Well, I have a commercial property that needs a buyer. So if you
I'm not sure if I have any off the top of my head for Tennessee, but if they need financing, the ones you find, let me know. Happy to help.
Oh, crap. All right. So reiterating, Fed rate, and hopefully there's agents watching this too that maybe don't know. Fed rate is not the mortgage rate. And what happens to the Fed rate doesn't necessarily happen to the mortgage rate. There's some correlation, but there's no causation. Is that the best way to say it? I think I got that right.
Yes.
That means it's yes. Yeah. Think of it like
you're a statistics teacher.
Yeah. No. My wife is.
Yeah.
So yeah,
I would say the two bump shoulders, but they're not directly related. Yeah,
right. Like they don't move in union. They can do this and they can do that. Yeah. So anyway, Haley, thank you, man.
Yeah, thanks for having me. This has been awesome. Go Vols.
Super fun.
Rocky Top.
Holy crap. And again, I really half expect your husband to come flying in and join you in a harmony. So we're going to end this sucker now.
Yeah,
guys, we do it every Monday, 5 o'clock, after hours real estate. If you need a lender in this great state of Texas, this guy, I'm your realtor. If you're in Tennessee, it's her. It is 100% her. Not even close.
Oh, thanks, Chris.
We'll see y'all.